Day. This is the Elliott Wave weekly update for the S&P 500 being recorded on Saturday, August the 17th, 2024. I'm going to start with the SPX, the cash market, and I'm going to start on the 4-hour chart. So I'm not going to go back and I'm going to start on the weekly and just repeat the same things since our focus really has become this minor fourth wave. So here we are. Now, I'm going to leave my count as I have been working all week, actually for the last couple of weeks, and that is that we're in a minor fourth wave correction. And thus far, we've done the minute A wave down, and we're working still towards the high of the minute B wave. Now, at the same time, the alternate count argues that the ABC down that we got, that I'm labeling as minute wave A, may indeed be the entire minor fourth wave. Now, what has gone against that is actually the time factor. And the time factor that would suggest that this minor fourth wave should be more related to the minor second wave in terms of the length of time that it takes to actually unfold. So instead of being a matter of less than a month, which would be this, because the high was on July, I believe the 11th or July the 16th, and this low was on August the 5th. So really a lot less than 3 weeks, a month, so more like 3 weeks. Then, so within that time frame should be what, 2 months, 2.5 months possibly. So in any case, that's what's kind of pushed out how that's likely not complete. But if I'm going to take a look at where we are within the preferred count, let me go back and now add in the alternate. But actually, I'm going to add one more thing to the preferred. So what we have done is that we know that we have, this is the box. That's the box that, as Elliott told us, that the fourth wave will normally find its terminus, its endpoint, within the price territory, if not towards that low of the previous fourth wave of one lesser degree. We're in the minor four. That should relate to, in terms of where it finishes, to the fourth wave of one lesser degree, which is here the minute degree. So that would put that low, what we kind of expect to add on an extreme, I will add, at like 49.63, I believe that low was. 49.53. So we have lots of support there. We have the 382. This is again the 4-hour chart, but the 38.2% Fibonacci level, retracement level for a fourth wave, most common. 49.58, 49.60 up in that area. So very close. And now, but we have gotten to a low thus far of 51.19. This is in the cash. I'd be looking for the cash to drop below 5,100 and actually drop to the mid 5,000, so like 5,050, maybe even all the way down. So, but that was a spike. When it happened, this whole thing was just a really quick drop down, which, by the way, we could be starting. We could be finishing this, and then we start. Now, let's stick with what I'm building for. Could this be completed? It's leaning more towards no. It should have one additional likely C wave down. Now let's go back over to the preferred count right now, which remains that we're in that B wave. Now, so I will open this up. Let's go this way. That's not very clean, but I'm going to have to live with it. No, hold on. Let me do this. I like stuff to be very, very clean in terms of what am I looking at. So I'm going to go out here. We're going to try that one more time. There we go. Now we're going to bring it down. So here's what we're dealing with. We're dealing with this minor fourth wave. So if that's minute wave A, this is going to be minute wave B. Here we have the minuet A and B. I know it's a lot of letters, but just follow degree. We're in a minor degree fourth wave. That fourth wave will consist of minute degree A, which is in the white color, and A, B, C. We're in the minute B wave, which is an upward move. Should be followed under the preferred count with a C wave down. So one additional downside move. And it's kind of gotten a little bit sketchy because of how the money flows actually, and just other things that go with not really being bullish or bearish, but more level where particular positions are gathered either short or long. And when those levels get broken and what gets released is a flood of gamma, so to speak, not so to speak, that's exactly what it is, which is a measurement, which is part of an, it's to deal with options. And what happens when these levels, which may be a call wall, a put wall, or anything in between, we have other levels in between that are measurements of the size of a gamma position collectively, sits at a particular level. And what happens if that level is violated to the upside or downside? What can we expect? And often that's going to be either it's going to be a pickup in the rally or it's going to be an acceleration of a decline or a kickoff to a decline, to be honest. So here we are. And we're seeing some pretty intense. These are pretty strong. This in the S&P was a one gap, two gaps. So usually you kind of think, okay, what could that all be? Could this be 1, 2? And then we have 3, 4, or is it 1, 2, 3, 4, 5? All right, we're in the C wave. 1, 2, 3, 4, 5. I bring that 3 down. I probably could measure it out to see if 3 is the shortest. I don't know right off the bat, but that would be the hang. It's because we have 1, 2. And then what is this? Just the internal 3. We have a 4 and then a 5. That's a 3 and then a 4 and a 5. So again, we're balancing it out against what other side do we have? The other side that we have is that the alternate count would suggest that 4 is done. Then it gets put into a 1, 2, 3, 4, 5. And we're looking for a new high above this, which was 5669.67 or 5670. That's the existing high in the cash market. If indeed minor 4 is complete, we're in minor 5, we'd definitely be looking for that to break and to go probably further than just 5701. So what this could be measuring is wave 3. So if this is 1, 2, and we're springing up in that third wave, we're going to look for that, and then another pullback, and then another rally to finish minor wave 5. Back to this fact. Could this be done here? Yeah, I just pointed it out. It could. That is a possibility. We have 1 gap, 2 gap, we have a third gap, maybe, and then that's it. If indeed, little 4, boom, 5 gap, boom, done. Maybe. Possibility. Or does it start immediately? Let's not forget that we had an August expiration. Not that the size of the volume was really there, but what happens is that collectively, in all these different products that trade options, but then are also derivatives of the underlying. So in other words, it's like what I'm saying is like we have the SPX, the S&P 500 index. This is the cash index. What are the derivatives off of this index? Well, we have the ES, which is the futures market for this index. We have the spiders, which is an ETF based on this index. We have the various products that are associated with the spiders or just associated with the S&P in terms of an ultra long, ultra short, right? So those are all different ETF type products. Then we have some of the component companies within the S&P 500, such as Apple, such as Amazon, such as Google, such as Meta, Microsoft, Tesla, NVIDIA, all have derivative products based on the stock. And those products are really attracting millions, millions of dollars, if not billions of dollars. So my point, additional capital flowing around inside the market. And it flows between options, the underlying to all the derivative, either ultra long, ultra short. They all will force different positions, position changing, position squaring, whatever the deal is. The movement gets money moving a lot in a lot of different places. And again, I just want to toss this in because we talked about it with the NASDAQ. So what a lot of the data that I'm collecting now is really based on how the flows, the money flows from A to B and wherever the different products are, and what is then produced within it via the options that are going to give us an indication if a level breaks, what should we be looking for? What's going to happen? For example, we have call walls, we have put walls, we have large gamma position levels, we have volatility triggers. These are all calculated algorithmically, and depending on who the models are from, which by the way, mine are actually, it's because I subscribe to Spot Gamma. And I'm definitely not giving away any of the proprietary information because I have no idea. These are their models. But the numbers themselves and the levels are representative of what's happening within the options of these various products within the spiders, the Qs, the NDX, the NQ, the SPX, the ES, all these different factors. And then we have so many other things. So there's so much money rolling around that the concept of my trade room is, or actually our trade room, because I share it with my colleague, Sasha Goring. What I'm making reference to is this additional information helps day traders and swing traders. Position traders, it may help you as well. I just have to figure out that angle. But in terms of when these levels get broken, upside or downside, it can produce, and almost often does, the higher the level in terms of the amount of negative or positive gamma sitting there is going to flip a market if that gets broken one way or the other. Either they're going to find a lot of adjusting on the sell side, or it's going to be adjusting to the buy side. Now, we see that here. This was the volatility trade. What that's called risk on. So there's all these different levels that produce a reaction because we need to add into all of this volatility. Volatility is a very, very important component in any calculation of what you're trying to think of what's going to be happening, because as that increases and decreases, as it gets sold, what's actually happening? Is that a particular type of trade? Yes, and I talk about it. The dispersion/correlation trade. It's real. It exists. And we see it getting put on here and started here. And what they're trying to do, they're trying to grab that high, as much money as they can out of that volatility play, right? So in other words, you're selling the VIX. If you're selling the VIX at 30, it's trading at 15. That side of your trade is doing really well and likely been doubled down because you took that and bought into the volatility of, say, Apple, or which has gone up, right? Here we see it. So you're getting, the trade is working. What could cause it to reverse? Well, a change in the money flow, breaking gamma. So again, those are the levels that I'm going to be providing and am providing right now in the trade room, which, by the way, still, the promo is on. And the promo will go through September the 2nd, so through Labor Day. And it's offering a discount, but your first month at a discounted rate, but that's it. You come in, give us a try, see if it works for you, see if you like the service, like what we're talking about, and you're able to trade. It is definitively a service for traders, active traders for that matter, active traders in the futures market, or active traders in the spiders or in the Qs or in one of these other markets. Okay, back to the SPX. So what can I look for from here? I'm keeping all windows and doors open right now because there's a storm and it's brewing. And if you close your windows, the windows are going to blow out. So I'm keeping all the possibilities open. If this is done, then I'm looking for the SPX basically to gap down tomorrow morning. I don't necessarily see that. I think we still have a little bit more upside to go. But we've already are now coming past levels that I think should contain it. So while I think that, yep, we may need a little bit more, I'm not looking for this thing to break out under the current preferred count that this is a B wave. It could, if it is the fourth wave is complete and it's a minor fifth wave. And what we're inside of is a minute wave 3 of minor wave 5. If that's the case, yeah, we could start to explode higher and appear the finish wave 3. So what's going to do that? A continuation of the volatility trade, of the risk on trade, of having to make adjustments that, the release of all of, we have to see what the levels are going to come in tomorrow after Friday's expiration. Don't forget, that's a lot of gamma that just kind of goes away because the positions are settled. They expire, they settle. That is removed from the market. Could that release a volatility uptick? It could. It could. Because part of the trade is done. So maybe we start to see, well, we get a pop in volatility before the next line of that trade maybe comes on. Or does it continue in terms of risk off? Again, got to wait, got to see what kind of plays out here. So upside, yep. If it's still within this B wave, I'm not looking for a lot more. We've already exceeded 0.786 for the B wave. Yep, it can go. I definitely don't want to see it. Remember what I talked about with the S&P, excuse me, with the NASDAQ. It's a 535 coming down, 535. I know what a lot of people think it doesn't fit, but it is. Break it all the way down, 535. It does fit. This is the cash market, and within the ES, much clearer. So there's a little bit of a problem there for Elliott wave. True, got to stick to what the structure actually is. I get you. I really do. But there are changes that are happening simply because of the flows, the money, the options, the gamma. All of that put together does produce a little bit different patterns. Still, 535, just not so much in the cash. Now, that, if we listen to Elliott, but it was a guideline, not necessarily a rule, at least if I'm mistaken, please correct me. But as a guideline, Elliott basically said if we have a zigzag for an ABC for that first, then if the wave A would be considered a zigzag, wave B should not even get close to being a flat. In fact, 0.618 is usually the level. It gapped above it. That tossed it over to, okay, minor 4 is done. So you see how I'm trying to wait this out? But this all could change. Geopolitical stimulus, all kinds of things. The narrative could change very quickly. We've got some political situations going on, more settled in the Middle East, and then just go up north into Eastern Europe. So we got a little bit of tension there as well. So either one could tip the scales and we start to head lower. Now, moving averages. On the 4-hour chart, the 20 period is just getting ready to pop its nose back above the 50, which, by the way, has turned and started to move higher on its own. If the 20 gets above that 50, I would think we get a little bit of a stronger uptick, more people moving into longs. Now, we're already above. The 20 broke above, and the 50 never broke below the 200. So here sits the 200. We have the 20 above, we have the 13 above it, and they're both heading strongly higher. And now, where are we? Almost in alignment to go or to continue higher. The fact that the 20 has not crossed the 50 could be lending a little bit of resistance and the possibility of just doing that. Then it reverts, goes down, this reverts, goes down, this reverts, goes down. And it wouldn't take much in my mind to actually break below that. This breaks back below the 50 and this doesn't get above the 50 and just turns and breaks below the 200. Then we're in reverse alignment. And then we're in alignment to go down. So we're at a very kind of a critical point. Upside, yep. And this would be the indication. And then we'd be looking for moves above there. All right, let's go over and take a look at the ES, which actually is pretty much the same. Where I'm going to go and just open this up and let's talk about that alternate. Again, it definitely could be an ABC. And well, it is an ABC, but of minute degree, whereas it's minor 4. It did come into the price territory of the previous fourth. And it came in at 51.23, I guess 23.21, whatever that low is. And this low was 50, just under 5,100. No, excuse me, well under 5,100. So it's 5,028 is where this guy comes in. And so this difference, about 90 bucks, 90 points. Is that enough to say, well, we still need to see deeper? It is. But it also, on terms of the structure, getting inside the previous fourth, that's big. That they're equal in terms of the time for the minor versus the minute. So you might expect more for the minor, but boy, that C wave really kicked in as a C wave, and it was just devastation to the market. It dropped 500 points. Pretty big drop. And not very long. August 1st to August 5th. 4 days. That's a pretty steady get out of my way. What if we did that again? 4 days. Could we be back down here? We could. We'd start from a lower level. We would be back down towards here. Holy cow, could it happen? Yeah, it can. And it can be swift and quick. So just saying. So that is out there. Otherwise, let me bring this down. Let's take a look at the hourly chart. On the hourly chart, here we have the ABC, and here we have the AB, and now we're in the C wave, the minuet C of the minute B. And here, 1, 2, 3, this could move. So let me just kind of readjust these, because this would go up here. If indeed I need to move this 3 up to here and the 4 up to here, what does that change? It puts us up above which is why I don't agree to do that. So I think that here we are at a very significant level in terms of this count. Right? If I move that 4 up to here, we're up to new highs. And if that's the case, then this is 3, 4, and this is 5 of 3. So this would be 1, 2, 3, 4, 5. So you see, we're very critical in terms of the S&P. Now, one other one that I can add here is 786, which also not quite been exceeded. That's 55.92. Maybe it can. Maybe it wants to really go test that 5,600 level. God only knows. But if it does, it's still going to be good. But if we start to really break above these levels here, 56.25, 56.30, it's like, no, I believe then we will be headed. And it'll depend if it just inches its way up there, then it's just whatever it's doing, it's doing. If it does it with a gap and a run, then I'm going to be very, very much in favor of this being minor 4. And this is a 3 and a 4 and a 5. And what we're finishing, don't forget, as I've been saying all along, minor 3, minor 4, minor 5, new highs, finishing intermediate 3, intermediate 4, back down to where we just kind of came from, maybe a little deeper, in an intermediate wave 4, and then back up again. A lot to go through just to reach that completion point for, again, that primary wave 5, and then get the longer term corrective phase. So still got a lot to do. And I'm not trying to connect what happened to the economy. We got a ton of things. There are many narratives out there, folks, versus the Fed's going to start cutting rates. That's bullish for the stocks. It's like, not necessarily. Not necessarily. What's the answer to inflation? A period of deflation. What does deflation cause? What causes a recession? What's the R word do? Put the market back in a negative. Okay, and then all kinds of things jump out at you at that too. But at the same time, we as the consumers, we're tired of paying the prices we're paying. We'd like to see prices come down. Prices come down, companies make less money. Companies make less money, the stock market goes down. What really benefits? Well, my 401k won, so I can't really be in favor of a down move, but a down move is going to improve the quality of my life day to day, hopefully. So you see the argument? It's kind of crazy. So what can the market do? It'll find a reason, and it may go down fast, and it may go up fast, because it's got a lot to accomplish before all will be known to what our longer term prospects are. Okay, so here we are. We got our marching orders in terms of what's left, possibility of a little bit of a down, and one more run up, right? If this goes here, 3, 4, that is 1, 2, 3, 4. We're in the 5. We're in the 5. Does it want to go test 93 to 60 to 5,600? I think so. We're going to find out. And if they gap up through it, that's our other answer. We'll know more come Monday morning. All right, the next Elliott Wave Daily update will be on Monday, August the 19th.